Hello friends, so we have quite a complicated collection we have built over time being a professional trader and this tool which we are going to talk about talks about the market timing because that's a big taboo in the world that no one can time the market, no one can find the future, and we have around 40 models which just does that. So this is just one model. We dropped on it on a chart and it automatically plots the entire grid. And these are the red lines, which is your day markers. And when the new bar, the first new bar is generated, we plot the upcoming sessions, turning points. So there are so many applications of this. Since these tools are not in public domain, so if I plot this chart for you like we did in Twitter, right? So we plotted last year at the beginning, way back in the plot, how the market cycle will go up and down. I think we hit 10 of those out of 11. We plotted this morning, this is the turning point. And the reason I plotted this one, all the lines are already there. I said maybe we should wait for this guy because I was expecting certain behavior, which I'm going to explain why. And what happened was market did much better turn on this previous line. So what are these lines? And what is really going on? So let's get to business. So these lines are basically the energy flux lines, all right? And they are harmonized for the frequency of ES, which is 369 model. We print out 30 dimensions of frequencies and we average them together and we build the composite, and this is what the grid is talking about. Now, which line will it stop at? Why did it stop here? Why did it stop here? That's a very complicated discussion, a very profitable discussion, but that's not the point at this point. All right, so when I plot these lines, what we are expecting to happen? You now take the observation of the dots and the boxes on the top, right here. They say there is a rectangular box. Let me zoom in a bit. Right there, and here, right there, right there, right? So their box is plotted. And there are also circles showing up here, dots, or small circles, right? Filled up. 1, 2, 3, 4. This model, these are the vibrational levels. This is a 9-minute chart. You can't see it. And obviously, you don't want to trade every swing. Turning point, right? This is a turning point right here in this bar somewhere. Market was going somewhere. It does unleash the energy. So what we are saying is, okay, this is great that this happened, right? This is where the market is going to do something. It may be off by a bar because the way bars are printed, we have to print it at a certain time, right? Because of the virtue of the printing, it's not a pixel-based printing, it's a bar-based printing. You will see an offset by a bar. So it doesn't matter much, right? Because you are anticipating what should happen and where it should happen, price-wise, forecasted price and forecasted time. Well, this was a rare occasion where both came together, right? Merging the time and the price at what point, what price market is going to be where is a very challenging problem. We have a lot of assets to come pretty close, but not 100%, right? It's impossible. So when you see this line, what to do? Well, these are the projected turn, which basically means if the market is coming into these levels, expect a potential turn. That's all it means. Now, why do we have a box? The box is basically the range. It's not really a point, which is showing a line to the bar. It's actually a range right here. See that? That's why we have a box. Here, same thing. We're expecting a turn or a push happening here. Now this one, depending on how I will give you some ideas how to use it as well. And here, same thing, right? This is a box. So these boxes are basically the vertical points where we are expecting the turn in the system to take place. You can see plotting all this will become a little messy, right? But that's how it is. All right. Now, how I am using it. Like here is again the box, right? So every day you'll get one good trade to pick the high or the low. Now, we have other advanced technology, which we can talk about a little later. We can predict every pivot, right? Time it also. That requires a different interaction between heavenly bodies and a different astrophysics models we have, right? So anyway, so it's about setting the anticipation where things might happen. Now this is hourly range boxes, right? So it can happen at the beginning of the hour, middle of the hour, end of the hour. So we know that way hours and hours and hours and hours in advance. The moment this bar is printed for the new day, we know these levels where things can happen. Doesn't mean it'll happen, but we have anticipation. All right. So once you see these lines plotted, you have some ideas where turns are. Now, how do you use it and why we have vertical lines? Vertical lines are where these dots and these boxes are almost overlapping. Again, this is a printing situation, not anything else. So basically, we are saying if one energy is strong, two overlapping energy is even stronger. So we took a shot on NQ yesterday at this spot and we held it all day long. And here we let it go. I didn't reverse it because I was waiting for this guy to even go a little further down, even though our good old friend came very close, right? So I was waiting for this. Well, this was our area of the market maker. And I put it to the lower area because I have some overlapping things going on. So I got out. Somewhere here I got out, right? But I did not reverse because I was expecting that if it touches here by 11:30, I will get in. It's okay. And then also our another tool which we have, which you have been seeing on the plots, is the cycle tool. I think we have videos on each of them, right? So yesterday we had this momentum and then the cycles are shifting, right? So we had that. Again, it all happened early morning. And this is where we had the low for the day. So anticipations through the cycles, anticipation through the time, anticipation to the anticipated level sets up the stage for next day. We know that with 80% accuracy, these things will happen because we've been doing this for a very long time. So we know. Well, these are homegrown models, right? So a lot of research, being a quant research scientist, that's what we do. But anyways, this is a different kind of science. All right, so now comes the second part. You have this line, how to trade. Now you have dark pools, you have white pools, you have market order flow. You have to observe those things at this level. Or you can also simply put some lines, trend lines, right? Everybody knows how to put trend lines. In the next video, I will show you how we can pinpoint this accuracy and do something about it. Now the problem is you don't know these lines. You don't have these lines. So you cannot use this as a stop loss or profit taking targets either. But you have these vertical lines, and hence I'm talking about using as a potential turning energy shift in the market. Will it work every day? Not really, because you can see here, you'll get one hit, nice hit. Which one is going to be that we have to use other tools for that, but we have those tools. So, but that's what I'm getting at. So when this energy is coming, market is going to come into this energy level and bounce back. What can happen? This is 9-minute charts, right? So these are 10-point separations, $1 S&P separation. As you can see, right? The boxes are here, turning points are coming, boxes are here. So I will try to plot this and the line just so that there's no confusion. All right, so that is what this is. Now the trading, this system itself is a complete system to trade. You don't need anything else actually. If you get market maker levels or dark pools, they all show up in the same time. It's a funny thing is they all show up at the same time, but we are trying to see where are they going to show up way in advance if there's no levels there. And they'll play the levels for sure. Now obviously if I want to trade this system, this is the line, so 2-to-1 reward, right? So this is where these lines are designed as a 9-point separation for a reason. So if I'm taking one 9-point risk and I'm expecting it to move 2 boxes, 18, 2-to-1. If I want to take a maybe try 1 or 2 times with small stop losses, I can do that too. Then what I do, I just don't take this big room to play. You need to give some room to breathe, right? Because there's a loss of momentum and there is a leftover momentum, as you guys know. So what we have to here is, was people have this idea that I should load up. So if you want to load up kind of trading, so what do you do here? When it gets close to your time in this level, if you see there's a sideways pattern, now this could have been a 50% of this and gone down 50% into this, which I was expecting. I was looking at cycles to, because I like my cycles to stretch to the extreme. That's why I have a very high level of accuracy in trading. I wait and wait and wait. Nothing else I do, just wait. When panic hits, I activate myself, right? And I know these levels. So, which also means if you want to be that level of a trader that, hey, I want to take 2-point stop loss and have 20 contracts or 100 contracts, you can do that with addition of order flow and see if the buyers and sellers are showing up or not, right? You have to do some little bit deep inside the bar looks, but these lines can be used for that as well. Since you don't have those lines, it's hard to comment on it, right? So, but typically what we do, we just hide behind these lines, hide behind this line. So this is my stop loss. If I'm taking 4-point stop loss risk, I need 16 points, which I got easily. 1 to 4, 1 to 4, 1 to 4, right? So that's what it is. So I think now you know what is being plotted, and if it adds any value to you, please feel free to use. We'll plot it at least for a while and see if there's any interest and any benefits anybody's getting out of it. So now the second part is, you have this line, you're using your own tool. It could be anything you like. I can simply look at this, right, like trend lines. Let the trend line break. And then I can do, instead of chasing and picking the bottom and top, let it break and I put a buy stop here in case I'm going long, right? If market has broken itself, it might take you out 1 or 2 times, but you are here to catch the bigger wave. So what we can do is you can put a buy stop. If it keeps going down, nothing to worry about. It goes here, that's fine. So if it goes here, stops here, same thing. Draw a trend line. Let's say you draw a trend line, right, depending on where it is, and then put a buy order, stop order right there. Don't chase it. Let it pull you in and prove itself that there's a momentum behind it. So these are the 2 possibilities I can think of right now for you to use this timeline as. So there's also a very complicated slope and target lines. I don't want to talk everything in one shot unless we are putting one thing and putting it for months. So you get used to it and see, okay, there is value. There's no value, move on, right? Don't get attached to any tool. They're just that, enablers. In the end, it's going to be your own mind control which will do it. Once you get that stage, then it's all just tools. And after a while, you see all the games coming up, right? So there we go. I just wanted to discuss that. So if you are using these lines, what these are, where they're coming from, why they're boxes. So tomorrow, if I post it like this, right, like this, so you know at the bottom, I mean, you can't see the time, but I can see it like this. I'll post it and say, okay, 11:51. I told today around noon. We should see close to noon, 11:45, 50. Obviously, it was delayed by 20 minutes, but it did actually reverse, right? So because we were in this box, so always zones. I will never plot a single level for a reason because the contract, when we were working in the bank, we were collecting contracts at certain levels. And we don't want to, retail people have their own buzzwords, but ultimately it's all about finding contracts, finding inventory, and then collecting inventory and making the move. ES is complicated in such a way that we have buy and sell programs which are running, and they do hedging with this. They do a lot of things, complicated things with ES. And it is not, crude oil is very simple, easy to trade, wheat, easy to trade. This is complicated in the sense it doesn't really represent the true trends. It represents the hedging complexities, and people use it as a hedging tool for buy programs, sell programs. So much things going on, you have no idea. But we love those panics, and especially when they come at this line. So that's about it. I think we spoke much more than I had to. So the boxes are designed for that. Lines when the two energy points come together, anticipation is set up for a change of direction, and you know this in advance. That's all there is. Don't look at the other dots, they all will work. Wait, you need a lot more tools to accomplish other things. Thank you so much. I hope this helped, and if I will plot it and see if you can use it. Thank you.